Good morning from our global headquarters in New York. I'm Manus Cranny. You're welcome to Bloomberg Brief. Let's set your agenda. A slew of rate decisions, a bonanza. Long on rhetoric, but only one delivers action. The Swiss National Bank cuts interest rates again as we count down to the Bank of England. In China, the PBOC loosens its grip on the yuan, setting the rate at the weakest since November. And is the golden age for private credit about to fade? We'll sit down with David Golub of Golub Capital. A very good morning to you. So the Swiss come out with a little bit of a shocker for the market. More on that in just a moment. It looks as if you're about to open up for the 8th day in a row on a winning streak on the NASDAQ. The 31 records in a row for the S&P 500. But it is down to this spectacular elixir of life that is NVIDIA. It is up by over 4% this morning at one juncture. There's the SPOOs up 0.4% at the moment. NVIDIA up, adding $170 billion in valuation immediately this morning. Likewise with Dell up 3.5%. Let's have a look at the prices of those NVIDIA up 3.5%. You're looking at 10-year government bond yields here. Again, what you have is a whisker away from wiping out all of the losses for 2024. Euro Swiss, as I say, on the currencies, it's the Swiss. This is the euro up, the Swiss falling. Again, prepared to intervene. That is the message from the Swiss National Bank as they cut rates for the second concurrent time, down 25 basis points. Let's get to Alessandro Speziale. He joins me now on the decision from the Swiss to cut rates. This could be seen as much of a political move as it is of a monetary policy move in terms of pushing back against the flow of money into Switzerland from the euro crisis, euro political disruption. There we go, not crisis.
Yes, absolutely. First of all, we know that the SNB likes to surprise. This decision was a bit of a toss-up, so not a complete surprise, but the SNB was the first major central bank to cut rates, and now it's the first one to do so again. And of course, this compares with the Fed that still hasn't moved, and the ECB's reluctance to continue after the first rate cut. And the main reason is that the franc had been appreciating because the instability in Europe, the snap election in France, the result of with the far right winning in the European election has, or again, moved flows into Switzerland as they seek for a safe haven.
Indeed. Well, certainly it's moving euro Swiss as we speak at the moment. Actually, ironically, all ironies aside, it moved more against the dollar in the first instance. Alessandro, thank you very much. Alessandro Speziale there on the SNB's swift move to cut rates. So we've had two hot inflation prints and a looming election. The Bank of England will almost certainly hold rates unchanged, with the focus turning to the odds of an August cut. Lizzie Burden is with us now. So, Lizzie, obviously the services inflation is not setting the table for a rate cut, but politics, again, will muddy the waters in the UK. Why will today be a non-event in theory?
Well, Manus, because of the election primarily, you've had officials on silent mode ever since Rishi Sunak called the vote, because they don't want to be seen cutting rates for the first time during the campaign. Optically, it would look like the old lady of Threadneedle Street was giving the government a hand. But look, there's still much for markets to mind, even though we don't have a press conference or a forecast or potentially even a rate move. Look at the guidance. Does it suggest that August is a live meeting? Are they comfortable with service inflation, as you say, coming in unexpectedly hot? And also look at the vote split. It was 7-2 last time. Does it become more dovish? But Manus, I would also just say, even if they keep rates on hold, that in itself is notable. When you've got inflation at the headline level, at least, back at the 2% target, and rates still at 5.25%. And if they don't cut this summer, they could miss the chance to do it if inflation goes back up towards the end of the year.
Well, that is the theory, isn't it, from our next guest as well. Lizzie, thank you very much. That they're running out of time to deliver these cuts. Have a great day in the sunshine. It doesn't last long in the UK. That is Lizzie Burden outside the Bank of England. James Athey is a portfolio manager for fixed income at Marlborough Investment Management. James, good to have you back with us. Here we are. Volatility in Swiss assets is the highest since they removed the cap in 2015. How much of this, in your mind, is a political hedge? Because Jordan does warn those people that want to take a punt on the Swiss that the central bank will fight back if they need to.
Yeah, morning, Manus. I'm very jealous of Lizzie out there in the sun while I'm stuck here in my little dungeon. As you said, we don't get much sun. It's good to be out when we do see it. The decision today from the S&B to me doesn't look quite as focused on Swiss franc appreciation as potentially it has done in the past. If you look at the specifics of what they've said today, really, it does seem to be about underlying inflation pressures. And so a more sort of traditional, if you like, easing of policy. That's understandable. You've got headline and core both well below 2%. But obviously the Swiss franc and its appreciation and the role that plays in the economy and in the inflation process is a perennial problem for the SNB. Of course, they've even attempted to deal with that with what turned out to be a fairly catastrophic floor policy for Euro Swiss. So I don't doubt that in the minds of those decision makers, there is ongoing concern about, persistent, shall we say, appreciation of the Swiss franc, and that being both deflationary and a sort of a hold, if you like, on the Swiss economy.
Just to square away the idea on flow, I mean, the Swiss are going to have a battle royal on their hands. They've got a UK election, they've got a US election, they've got disruptive elections which have not gone according to plan in the first 6 months of the year. How much of a headwind is political disruption to the flow into the Swiss?
Wow. I mean, yes, it's when you have a safe haven currency and we enter a period of instability, I think it's reasonable and rational to expect that you're going to see some flight to quality flow.
Yeah.
Quite how disruptive these electoral events all turn out to be is obviously question, but certainly I think the one most proximate to Switzerland, which is to say, the French election, is the one which we all have most concerns about. I think it's very difficult to see a quote unquote good outcome. It certainly looks difficult to see a stable outcome, and there is a potential for some quite extreme elements of both left and right within the sort of ruling parties. So if that does end up being very destabilizing for European assets, then yes, I absolutely would expect to see flows into the franc.
Now, as you've just said, France is one of your more serious concerns. If you look at the French-German spread, we're at 80 basis points this morning, 79 basis points in change at the close of business on Tuesday. So we extrapolated it back to a crisis that we both lived through on a day-by-day basis. It was the European debt crisis going back to 2012. How serious a concern is this explosion higher in this spread, James, or is this actually a phenomenal opportunity to step into French assets when all the world is running in the opposite direction? How do you look at this spread? Contrarian?
Definitely the former rather than the latter, man. Yeah, at 80 basis points, you're getting more compensation. But if you actually look at the fundamentals, France is in a pretty nasty situation, to be honest. It really has the economy and the dynamics of a peripheral country, but it has the obligations and the appearance of a core country, and that's not necessarily a particularly good combo. The deficit is large and has been widening recently. Unemployment has been rising a little bit, and from a structurally high base, France has structurally high unemployment and an inflexible labour market. And now we've heard obviously from the EU just in the last day or two that the excess deficit procedures are back on the horizon, and that requires a fairly significant belt tightening, which is obviously going to be a significant economic headwind. Meanwhile, the ECB obviously has to set monetary policy for the region at large. That's not a particularly great combo, and the parties who are contesting the election from left and right essentially all have policies economically which look from the left of the spectrum, which is to say, broadly speaking, ones which were going to expand the deficit as opposed to contract it. So there's an increase in risk premium in French assets, and that's correct. To us, that does not yet look asymmetrically attractive ahead of the political event.
OK, I couldn't squeeze you for a trigger point of where it becomes asymmetrically attractive because I'm rushing out of time, so I'm pushing through like a bulldozer this morning. Give us your crunch point.
I mean, it's got to be at least 100 basis points, I think.
We'll take that from you. Now, I want to get to duration more broadly. Obviously, we'll hear from the ECB a little bit later on. The Swiss have just cut rates. Maybe August is live. But the Fed, if you listen to the voting members of the Fed, and I think that's critically important, from Barkin, etc., it is going to be extend and pretend, one and done, if you're lucky. You like duration. I'm curious to know, adding duration, reducing credit risk, spreads are too tight given the adequate compensation or significant potential for excess capital appreciation. So if you like duration, I mean, Do you like more British duration than you do US duration, given the context and the divergence between central banks that we assume?
Yeah, I mean, but ultimately we like both. We're overweight US and UK duration. There are some similarities in terms of the central bank communication, the inflation problems they're dealing with being largely that sort of more domestically generated services inflation, which responds more to labour market conditions and wages. But it's important to understand the sort of chronology of that process. Inflation is going to be the last thing to come down in that sphere. We are already seeing softening of the labour market. That's a bit less easy to be confident about in the US, but we would raise significant concerns actually about the veracity of the data. And to be honest, the fact that Jay Powell actually noted that at the last FOMC meeting, I think was pretty significant. So labour markets will soften, they're normalising, they will weaken. Ultimately, that will bring wage growth down, and ultimately that will allow services inflation to normalise. And that will allow central banks to ease policy. The timing is very difficult, but the risks are increasingly in favour of owning 10-year yields at 4 to 4.5%, because we strongly believe that economies are not going to grow above potential with policy where it is currently.
Okay, nicely put. We're out of time, but good to have you back on the show. And back in the saddle there, giving you calls. James Athey there of Marlborough Investment Management. Our guest this morning on the bond markets. Other stories trending on your Bloomberg terminal this Thursday morning. Families of the victims of 2 fatal 737 MAX crashes are asking the US Justice Department to fine Boeing nearly $25 billion. They say the company committed the deadliest corporate crime in US history. Dell CEO Michael Dell said in a post on X that the company was building an AI factory with artificial intelligence. Heavyweights NVIDIA that would power the next version of xAI's chatbot Grok. Coming up in the hour, we speak to David Golub, president of Golub Capital, on whether the golden age of private credit could be fading. Context matters on Bloomberg. Bloomberg Brief. I'm Manus Cranny in New York. A very good morning to you. So the plans for what could be the biggest shift in how China conducts monetary policy are starting to surface. Jill DeCease joins me now to break it down. So Jill, this is all about potential bond trading from the PBOC in the secondary market. What exactly do we know, and how could it impact the flow of money and policy?
Yeah, Manus, so essentially what's happening here is this is something that was initially hinted at in a document containing a Xi Jinping speech published all the way back in March. Now we're actually hearing it from the PBOC governor himself. It's kind of a two-pronged thing here. So as you just mentioned, this idea of both buying and selling in the secondary, these government bonds in the secondary market, maybe getting the market more involved with the interest rate process. The other part of it too is that Peng Gongsheng, the PBOC governor, he also hinted that maybe they'd be trending more toward utilizing just one short-term interest rate. I think, Manus, there's still a lot of big questions that are unanswered here about how exactly China's driving a lot of economic policy through the central bank. I mean, I'm not sure that this necessarily solves, for example, for the issue that does sort of focusing on credit when home buyers and companies don't necessarily want to take on more debt, ultimately solve some of these issues. But still, it does kind of indicate that the PBOC, the People's Bank of China, is willing to dip deeper into its monetary toolbox to try to affect policy, again, try to change some things up here. I think it also, Manus, calls into question the value, long-term for certain rates that they're already using, such as the medium-term lending facility rate. That's that key policy interest rate that they haven't really touched in about 10 months, even though they've lowered borrowing costs in other respects. So I think a lot to keep an eye on here, just looking at how China is actually implementing these policies and what it'll ultimately mean going forward for the central bank and for the rest of the Chinese economy.
Okay, Jill, thank you very much. And we're just showing the offshore yuan there. Obviously, a weakening setting by the PBOC, allowing it to drift higher by 33 ticks. So certainly they are conscious of the strength of that dollar, having held some of the rates steady by the banks last week. To geopolitics now. The US State Department has called out China's escalatory actions in the South China Sea. The move follows the Philippine military releasing videos of what it described as China's brutal assault in disputed waters. Bloomberg opinion columnist Mark Champion joins me now. Mark, the tensions, are they threatening to expand further?
Yes, essentially. I mean, this is a trend that we've seen over a number of years in which China's Coast Guard has interfered with, used water cannon, rammed ships from the Philippines and other nations that have conflicting claims to islands in the South China Sea. The real thing to kind of keep in mind is that over the years, the Chinese Coast Guard and Navy have been expanding at an incredible pace. Whereas, for example, the Philippines has and the entire Navy is about 100 ships, and their job is to patrol about 7,000 islands. And they simply can't really keep up. And so this was an instance of a supply ship going to resupply a ship that was deliberately grounded by the Filipinos on an island that they wanted to make sure stayed in their possession. And so, there's a monthly resupply to that ship, which is essentially like an extra piece of the island at this point. And the Chinese were basically saying, you have no right to be taking weapons or anything else to this island. It's ours. And the Filipinos obviously claim and have had their claim, supported in international courts that it's theirs.
And elsewhere in Asia, of course, we've got Vladimir Putin. The imagery was very, very potent. Vladimir Putin signaling mutual defense pact with Kim Jong-un. And this is after he visited North Korea. There was a great deal of sort of social media fanfare about the two of them driving in a car that was gifted from Putin, again, to Kim Jong-un. But this pact, this agreement, comes at a very tense period of time, doesn't it, in terms of East-West relations?
It does. And again, this actually is really a big deal. I mean, especially a big deal for North Korea, which has been isolated in all kinds of ways over decades. Russia, used to be part of an international consensus that was keeping pressure, sanctions, etc., on North Korea in order to, prevent it from becoming a nuclear power. It clearly no longer is. This is a door that opens for North Korea, in all kinds of ways to secure technology, military technology, and so on. And from the Russian point of view, a massive boost to their campaign in Ukraine, because the North Koreans have a huge, stockpile of artillery shells, etc.
Okay, Mark, thank you very much. Two very contentious issues arising on the geopolitical front. Mark Champion there from Bloomberg Opinion. Let's turn to some stocks that we're keeping an eye on. I mentioned NVIDIA. It's almost, we may as well put it on the board as a daily check, but there it is, up 3.44%. We were up 4% and change at one juncture. And of course, Supermicro all rallying pre-market. And this is it. Dell CEO Michael Dell said on a post on X that the company was building an AI factory with NVIDIA that would power the next generation of xAI's chatbot, Grok. So let's get to Subrat Patnaik. He's got the details on this. I mean, we saw Jensen Huang on a roundtable recently talking about the co-joining of forces in tech. But just talk me through what this arrangement it is and who benefits.
So it's from the top down. Everybody's going to be using NVIDIA chips. But for NVIDIA chips to be used, you need to build servers, and companies like Dell, HP, Supermicro are all in line to kind of get contracts. And on a very cryptic and very typically Elon Musk post, Musk just said that half the things for his startup were going to be built by Dell. But the other half, he suggested with just a single word, saying SMC. So that could stand for SMIC, and we've seen shares in pre-market trading just go up on that. So we have Dell, SMCI, and NVIDIA rising more than 3% in US pre-market trading today.
Okay, well, they're certainly infusing a spirited upside to the opening potentially here in the United States of America. Subrat Patnaik on the tech story. This is Bloomberg. get you your front pages now from around the world. Headlines, this is what we've got for you. Never far from your mind. The journal's gone with NVIDIA. The ascent of the most valuable company has the echoes of a dot-com boom. And that came with a tragedy at the end. The chipmaker passes Microsoft for the top spot, just as Cisco Systems did 2 decades ago. Cisco's then CEO, John Chambers, says this time it's different. Next up, Washington Post writes that once a Trump rival, Marco Rubio's shift puts him into the mix for VP. Rubio's position as a finalist to be Trump's running mate is the culmination of a years-long shift that has stunned and disappointed some of the senator's former associates. I'll leave you with a thought from the UK and the FT. Sunak claims credit for inflation hitting the target of the Bank of England. First time in 3 years that we've seen that. The Labour Party, who's hoping to govern, say prices are still too high. And the UK CPI is expected to rise again later in the year. And we saw that services inflation come in certainly higher than was estimated. Now, private credit's something that we normally do together, Danny and myself. This time we're going to sit down one-to-one. David Golub, President of Golub Capital. And we're going to ask whether that golden age of private credit is facing a headwind. From our global headquarters in New York, I'm Menace Crenny. It's Bloomberg Brief. Let's set your agenda. Rate decisions bonanza, long on rhetoric, but only one delivers action. The Swiss National Bank cuts interest rates again as we count down to the Bank of England. In China, the PBOC loosens its grip on the yuan, setting the rate at its weakest since November. And is the golden age for private credit about to fade? We asked that question to David Golub of Golub Capital in just a moment. Checking in on the markets, welcome back. If you've had a day out for Juneteenth, this is what we got for you. The NASDAQ, if it opens here on the cash, you could be in for your 8th day of a winning streak on that. NVIDIA powering ahead. It was up 4% at one juncture. Again, an announcement from Michael Dell talking about a real build-out along with NVIDIA powering both the stocks this morning. Both NVIDIA and Dell are furiously higher. It is the elixir of life to momentum. Rosenblatt, by the way, raises its price target to $200 on NVIDIA from $140. You're seeing TSMC make $1 trillion in terms of market cap as well. Other news flow on 10-year government bonds. We've almost wiped out all the losses this year for bonds. We're backing up a little bit, up 2 basis points. We've clawed our way back from more than a 3% loss on the bond markets. And Euro Swiss, of course, the Swiss down, the Euro up by 0.4%, as the Swiss National Bank cuts rates by 25 basis points. That was slightly unexpected, but they are prepared to intervene in currency markets if it all gets a little bit too much. 1.25%. James Athey with me saying it was more a monetary policy decision rather than something to do, in other words, an economic decision rather than pushing back against the geopolitical angst emanating from France and a flow of money into the Swiss franc. So it's just been a few short weeks since the industry leaders and Danny Berger gathered in Berlin for the private credit seminar Super Return. The question on everybody's mind is whether the golden age is about to fade. Joining me now is David Golub, President of Golub Capital. David, not an easy one to answer, but if we look at private credit funds, I mean, they're struggling to return cash to their investors. The banks are biting back. This frenzy in private credit is about to hit a wall.
So great to be here. Thanks for asking me. I don't think there's either a bubble here or a golden age. I think both have kind of been overstated. We've been in this business for 20 years. The way we look at it is it's just a good business. And we focus on making sure, as in any good business, that we have competitive advantages, that we have differentiation from how others in the industry are playing, and that we consistently do the same things and in the process produce consistent returns for our investors. So that's what we've been doing. That's what we continue to do. I think there's a lot of hype that maybe is overdrawn right now.
Why does Jamie Dimon say then there could be hell to pay in your business?
I
listen to Jamie.
You're probably better off asking Jamie about that. He also said there are a lot of brilliant people in this business. So I think Jamie is wrestling with an industry that is been competing aggressively with what banks used to do, and he's doing what he should be doing. He's talking his book.
Grant, and you're here to talk yours as well, but I'm curious to get your take. The narrative that's put forward is that the banks are throwing quite a large quantum of capital back at private credit. They lost ground to you. You've had a halcyon sort of 5-6 years here. How much are the banks really snapping at your heels and really eating into your territory again?
So our main business at Golub Capital is focusing on lending money to middle market companies that are backed by private equity firms. And the truth is that banks have not been in our business in a meaningful way for many, many years. The trend away from banks started in the early 1990s. It accelerated after the financial crisis. Where there's a bit of competition between the private credit industry and the banking industry is in providing financing to larger companies, companies that generate, say, $100 million or more of EBITDA. And that's a small part of our business, to be honest, Manus. It's an area where I think there's some healthy competition between banks and the private credit world. There are some private credit players who concentrate only on that large market niche. That's not us. So I'm not really too worried about competition from banks. They're not a major force in what we do on a day-to-day basis.
I was just looking at the skew of where your business is. Industrials, health, and tech, and yet your smallest, if I'm not incorrect, your smallest exposure is to the consumer in terms of rankings. Is that a very deliberate skew, or is that just where our center of excellence lies, Manus, as opposed to some nuanced concern about a slowdown?
No, it's a great question. So we focus and have for our whole history focused on resilient businesses in resilient industries. So if you think about that from the context of portfolio selection, there are naturally going to be some industries that we concentrate in and some that we avoid. We tend to avoid very capital intensive or cyclical businesses. We tend to avoid faddish or fashion oriented businesses. So a lot of consumer businesses have characteristics that make them less resilient.
Yeah.
So we tend to be more picky about those businesses and tend to prefer businesses like mission critical business to business software or like especially distribution, where demand is very consistent, customers are repeat customers, revenues are very predictable.
We are trying to understand what's going on under the hood. I know you say, look, Manus, there's a lot of hype and there's a lot of headlines. But if I look at the one thing that Danny and I have discussed many times here is the lack of exits from private equity. That puts pressure on them for a lack of liquidity. And so they get creative with the NAV loans, the NAV loans. When you look at that momentum in the market, that push towards NAV loans, those are newer debt structures. They perhaps come with less transparency. Is there anything that concerns you about the growth in that area?
I actually think the growth is slowing down in the area of NAV loans. It's been, to your point, something that's gained momentum during a period when, in many cases, private equity firms were loath to sell their companies because they weren't confident they could get the values they want. We see that changing. Right now, we've seen some growing momentum in middle market M&A. Feels to me like that momentum is growing right now. The gap that we've seen over the course of the last 2 years between what sellers want to sell their companies for and what buyers want to pay, I think that gap has narrowed very significantly.
And this sort of then takes us to the next point, which is what does your business evolve into? If we look at the defaults that have come through, for example, like Oaktree ends up owning a football team. Are you ready to? Well, that wasn't what they stepped into that particular deal for. Are you ready to own assets? Are you engaging with restructuring teams, or is Manus, that's just not the road for me? I'll do anything but own assets.
So, as I said, we've been in this business for more than 20 years. Sometimes, when you're a lender, things don't go well, and in my judgment, you need to be prepared to be able to step in and be a company owner from time to time.
Are you? Are you ready to do that? Would you be willing to do that?
Absolutely. We have been. We do that today. We have for our full history. We don't lend money to soccer teams, so I don't anticipate owning a soccer team. I don't envy the owners of soccer teams. That sounds like a very hard business to manage. But yeah, we make loans to companies that, if things go wrong, we're prepared to own.
So you've no FOMO about being in sport, no?
Not for me. Not for me.
Let me just finish off with this in terms of fundraising. Very briefly, I want to get your feel for this. Your approach to fundraising in the Middle East, is it getting harder? Is it getting tougher? They're a savvy bunch. I know them well. So give me your take.
I think investors around the world are getting much savvier about alternative investments. And I think increasingly, investors globally are looking at managers like us and saying, what's your special sauce? What do you do that makes you different from other folks? Why should I trust you to be able to continue to get high returns, premium returns? So I think investors in the Middle East in particular, it's an area where the increase in sophistication has been particularly marked.
OK, David, time has run against us, but we hear you loud and clear. You're not in the market for a football team. Jim Ratcliffe might be in the background there somewhere. David, thank you very much for joining us for your view on the markets in private credit. That is David Golub there of Golub Capital. Interesting take. Not frightened to own assets if that's what it takes, but he's not in the market for a football team. We'll keep you appraised of the situation this Thursday morning. What a beautiful, beautiful day. It's going to be hot, hot, hot in the city of New York. Good morning. It is Bloomberg Brief. I'm Menace Craney in New York. So you have a bit of action from the SNB, and we're counting down to the Bank of England. Of course, they are stymied somewhat by the politics of the UK. Inflation coming back to target at the headline of 2% for the first time in a number of years. The Prime Minister taking the crown on that one. But services inflation is still a little bit hot and a little bit sticky. Marcus Ashworth is with me, our Bloomberg opinion columnist. So it's amazing how the politicians run in and grab a year-on-year change. But of course, inflation is still sticky in the UK. How sticky is it, and how hard does it make the Bank of England's job to really cut after the election? Marcus, good morning.
Good morning. Look, I felt slightly sorry for Rishi Sunak because, yes, none of us believe that the government's attempts at inflation reduction are that important. They are in some sense. He could have spent a lot more and made it worse. I think his own minimum wage rise actually has caused more problems than he perhaps would have appreciated, and certainly the Bank of England are following that through in wage rises, and that their best measure at the moment of that is services inflation, which, as you alluded to, only dropped to 5.7 from 5.9. Now, this is very slow to go up and very slow to come down. And the Bank of England, Governor Bailey particularly, has mentioned that they're not going to take these things too seriously, although this is a 0.45, actually, 0.45 increase above where they expected it to be. So you could argue that's why they may have decided anyway to pass today. The fact they're in purdah, ever since the election been called, makes it almost certain that they won't do anything, because it would be very difficult to explain a interest rate cut, the first one, with no press conference and no real commentary afterwards, because they're not really allowed to. There will be a little bit of comments, I think, from Bailey, but on a very controlled basis. So it would go into a markets communication vacuum, and I think that wouldn't be very clever for stability purposes. So let alone whether or not inflation is a little bit sticky. Look, personally, I think at 2%, that's a clear evidence that inflation has gone up and come back past that through the system. A bit like we saw the SNB earlier, they are obviously worrying about where the Swiss franc is to the euro, but at the same point, they're seeing inflation dropping away quite fast. So I think a lot of these central banks ought to be focusing really on looking through a lot of this stuff. The Bank of England wants to, and I think they probably will cut on August the 1st, but you can see why a little bit extra time just to see if service inflation comes down below closer to 5%. And I think if we see that in the June data, which probably will be the trough, then maybe we'll get a rate cut, but not until.
Yeah, we're pricing 30% probability of an August cut, down from 45%, and that was before the inflation data. Of course, we have a general election to come, and it could well be a Labour landslide. Who knows what that's going to do in terms of market and asset pricing. Marcus, counting down to that election, Marcus Ashworth, our Bloomberg opinion columnist. Now, some stocks that are top of our mind this morning, never far from the agenda, is NVIDIA. But today it's NVIDIA, Dell and Supermicro, all rallying pre-market. You're looking at NVIDIA at one juncture putting on $170 billion worth in value. It's faded back a little bit. And this is all on the back of the Dell CEO, Michael Dell, writing on a post on X that it's about to build an AI factory with NVIDIA that would power the next version of xAI's chatbot Grok. So it is a trifecta of power. Matt Bloxham is with me. Matt, I mean, how significant is this news about the creation of the new AI factory for Elon Musk's Grok chatbot?
Yeah, I mean, I think for Dell in isolation, not huge, but I think it's a real kind of big milestone for what's to come over the next 12 months or so, with Elon Musk investing aggressively into that Grok AI platform to become a rival to OpenAI. So I think there's going to be an interesting dynamic as we move into 2025 to see all these kind of big tech titans challenging each other for kind of dominance of how the world's going to be over the next decade or more. So, a kind of relatively small step financially at this point, but significant for Dell in terms of a big deployment of their new AI factory platform and feeding into this growing rivalry between the big tech players on AI.
And then, obviously talking about NVIDIA, the stock this morning at one juncture is 170 billion in terms of market cap add. I mean, it's trumped Microsoft. It's taken the lead. It's jumped over everybody else. You've also got Taiwan Semiconductors making $1 trillion in valuation. I mean, look, we can talk about momentum and parabolic moves. I don't know where I am with this. It feels like a real slow, everyday momentum higher. But if you look at it and stand back and you go, wow, it is pretty meteoric.
Yeah, it is. And, I think it's a little bit surprising to kind of see this next leg up. But, I mean, I've just come back from the Cannes Lions advertising festival where AI is just on the tip of everybody's tongue. It's in every presentation. Elon Musk's been there too. So I think we're still in that phase where people are starting to realize just how pervasive AI is going to be across the kind of every aspect of our life and in every industry. And I think these big players like NVIDIA and TSMC are still very much in incredibly strong positions to take advantage of the opportunity. They've almost kind of got such a big moat now that it's hard to see how others can come in to kind of really challenge their leading positions in the marketplace.
Okay, Matt. Well, certainly it's adding fuel and the elixir of life to the momentum in these equity markets. If we open up this morning, it looks like the Nasdaq would be on for its 8th day in a row of a winning streak. So the momentum is there. Matt, thank you very much. Matt Bloxham, all about the moats around NVIDIA. Now look at that skyline. It is hot out there. A brutal heat wave is hitting millions of people across not just New York, but the whole of the US and Canada. Several cities and states are taking precautions, keeping residents cool as temperatures soar for a third consecutive day. Brian Sullivan is with me. Brian, this heat wave, I mean, it's all across the eastern seaboard. What is the impact?
It's been brutally hot just about everywhere. New York is kind of, they've kind of been at the edge of it with temperatures in the high 80s, sticky. But the heat is going to start rising in New York today. It's going to get into the 90s, and then down into Washington, D.C., it'll get up to about 100. There's a lot of demand on energy, but the rates seem to be holding pretty steady so far. But as those temperatures rise, we may see a little pressure over the weekend.
And in terms of preparation for this extreme heat, what kind of preparations, what kind of warnings are being sent out? Obviously, if you've got elderly neighbors, etc., maybe just knock the door and check on them. But from a state and city level, what kind of preparedness are we seeing?
They just send out warnings to people, stay out of the sun, don't work outside during the middle of the afternoon, those kind of things. They open up cooling shelters around various cities where they'll have air-conditioned spots where people can go if they can't afford to have air conditioning in their homes. Things like that. But the biggest thing is, check on your neighbors, check on small children, check on pets even, because that's a big thing. And the elderly, of course, because they're the most vulnerable.
Okay. Don't forget the cats. Brian, thank you very much. Brian, I actually saw people just touching the ground. I was walking yesterday, touching the ground for the dogs paws. Reminds me of Dubai. Taking the dogs out in the heat, the ground actually is pretty hot. So that is certainly one to remember. Brian, we'll check in with you through the week. It's going to be hot in the city of New York and beyond. Crank up your aircon. Cranking up the heat in the FX market. The SNB cuts rates by 25 basis points. Again, this was a second in a row. Some people say it was sort of unexpected. But you are looking at the euro rising against the Swiss franc this morning, up by 0.4%. Is it a political pushback? The governor is prepared to intervene in currency markets if needed. As you can see, the euro against the Swedish krona there, and euro sterling virtually flat. The real move is in euro Swiss today. Coming up, we'll set the agenda for you. Trading day, we're counting down to the Bank of England. The decision is on deck. Good morning from a hot and beautiful New York. It's Bloomberg Brief. I'm Menace Crenny in New York. This is how the rest of your trading day looks. We're counting down to the Bank of England. The rate decision is at 7 a.m. Of course, the bank is in purdah before this election, and we've dropped to around 30% probability of a cut. We've got data in the US. You got jobless claims, and you have housing starts at 8:30 a.m. Again, the jobless claims will be closely watched. More Fed speak, Kashkari, Barkin, and Daly all throughout the day. The narrative on the central bank speak is very much about it's going to be towards the end of the year. We need to see more evidence. Your micro movers are pretty self-evident. We've been talking about them for the past hour. These are they. You have NVIDIA pacing ahead. Again, this is all on the announcement, or on the tweet, I should say, from Michael Dell last night about the coalescing of Dell and NVIDIA in terms of building a new superstructure, a new production factory. So both stocks are pacing ahead this morning, likewise with Supermicro. Markets for you in terms of the actual movers. Keep an eye on 10-year government bonds. I mean, we are a whisker away from undoing the losses in this market of 2024. So we clawed our way back, all the way back. This is obviously the volatility in yield. As Barkin said, we're clearly on the backside of inflation. James Athey was with me this morning saying we feel very comfortable owning duration. This is one of the top calls. So the bond market very much in focus at 425. It's a pretty important psychological level on those markets. So we'll keep an eye on that. We're counting down. The big movement is, of course, in Swiss. It's a weakening in the Swiss, 25 basis points cut from them. And that is something that Thomas Jordan has made very clear, that they are prepared to push back on any sort of aggression in the FX market. We're counting down. The French have had a pretty sizable bond auction. What's interesting here is you're looking at a French-German bond spread, which is kissing 80. James Athey again with me this morning saying, look, it would need to get to around 100 before they would be prepared to do that. 10.5 billion euros worth of French government bonds are being sold for the first time since Macron called the snap election. Now, look, on average, they sell between 12 and 13 billion euros worth of bonds. Don't forget, they've got a budget shortfall of 5.5%. They're receiving verbal smacks in terms of their fiscal largesse. That spread has added 30 basis points in the past 10 days. It's a febrile market to come to ask for lending when politics are very much at their zenith of concern in France.